Hey everybody, Chuck Barone here. Monday, October the 3rd, 2022. New month, new week, new quarter, new, fresh, hopefully at least a little better than the last quarter, right guys? Wow, is it brutal. Anyway, as always, just want to give a quick shout out to all of you out there who support the channel, watch the videos, do everything you do to keep the channel going, keep us motivated here. We love you guys and appreciate you. Also, a special thanks to the people who took the time this weekend to watch our Q&A video. We just kind of trying to find a way to get some more of the questions that are frequently asked out in front of you guys. Nothing too complex. But anyway, we appreciate you guys taking the time to watch those videos. Big stuff to talk about today, though, guys. First, let's go through the markets. As most of you already know, stock market today up big day up, big rally today. The Dow Jones up over 750 points today, making a nice little bounce from last week's debacle. I'm looking at the market, I'm thinking, okay, well, GM came with some great earnings today. What's making this market bounce higher? So my question really, it's kind of like, okay, it's one of two things here, right? It's either a bear market rally, which happens frequently in bear markets, or it's a bet by the stock market against the Federal Reserve and St. Jerome having the guts and the wherewithal to stick to these rate increases in spite of all the havoc it's causing, not only in our economy, but in the world economy. I think the markets are starting to think, Jerome's going to go the way that the Bank of England did, and we may be seeing a pivot sooner than we think. I think the market's betting that. I don't really see it, but the market obviously does rally today, both in stocks and bonds. The bond market today up. The 10-year dropping to 3.65%, down 15 basis points. These are big moves in the bond market, guys. The 2-year declining 9 basis points down to 412. You got a 47-point gap inversion there between the 2-year and the 10-year. It's crazy. And there we sit with rates higher but coming down now. Bond market rally. The dollar today down, but down small. 111.68 on the index, losing about a half a point on the index. I think that might be another bet by the market that the Fed isn't going to have the balls to go through with these rate increases. So dollar down today. Dollar down tells us metals probably going to have an up day, and they did. Actually, a good day for metals today. Gold breaking 1,700, up about $40 an ounce today. Silver smashing, up over 8% today, sitting at $20.81 the last I looked on Kitco. Metals, nice day for metals. I knew as you're watching this market, and you see the resistance metals have had, and you see how they've hung in there price-wise, that you could kind of get the feel that they wanted to rally. They were just looking for a reason to. Well, they found their reason today, and a nice bump up for metals. Oil today up, $83.26 for a barrel of West Texas Intermediate. I think the issue there is you got OPEC coming out talking about cutting production to bring oil prices down. I don't really know how much production OPEC can cut. They're actually sitting 200,000. I think they have their quote is 4 million barrels a day. They're only producing 3.8 million barrels a day already. I don't know how drastically they want to cut. We'll follow that as it comes along. Natural gas down today again, 3.5%, sitting at $6.54 for their million BTUs. Price of natural gas coming down. I have not seen anything in the market indicating why it's come down so sharply. Be interesting to see where that continues to go, because we know the situation around the world with Russia, their gas exports, and what's the world's facing. It's going to be interesting to see where that goes. Bitcoin today up small, $19,530 last I saw. Decent day for Bitcoin. It's holding its own. I would like to see it break above 20,000, truthfully. But if it can hold this 19,000 support, start building a base there, so that's going to be our new bottom. That would be great, guys. So Bitcoin hanging in there. In economic news today, lots of interesting stuff, guys. So the U.S. manufacturing report comes in today, lays an egg, slowest pace in 2.5 years. Manufacturing, I think pretty soon we're going to starting to see layoffs there as the Fed does its thing to get employment slowed down. Construction spending comes in, down again, drops again. The largest decline since February 2021. It's just all bad stuff we're getting economically. Now, amazingly, at the same time, you get General Motors comes out, and their earnings were up 24% last quarter. So car sales, at least for General Motors, sizzling. Big quarter for them. And maybe they got some chips in and had all this pent-up demand from the second quarter they couldn't fulfill and got it fulfilled in the third quarter. But either way, a great quarter for GM. So again, it's just more weird, conflicting data here where it's like hard to kind of find your way in this crazy-ass market we're looking at, right? An interesting thing today came out. The United Nations came out today and warned the Federal Reserve and other central banks of a looming global recession followed by prolonged stagflation. It said the Fed must stop raising rates. Central banks need to stop raising rates because higher rates strengthens the dollar, which puts pressure, smashing developing countries, other economies around the world that have a lot of their debt denominated in dollars, so they have to convert their currency to dollars to pay this debt, which is now, some of these currencies are down 20 or 25% against the dollar. Add that on as you're exchanging currencies to pay your debt with interest. It's crushing these economies. Even our friends in Europe are freaking out about it. So now they're saying that they need to slow the increases down, or they're looking at a really, really gigantic worldwide recession, the death of some developing countries and their economies. Now, guys, the dollar is the world reserve currency because a couple of reasons, but the most important reason is because it's supposedly stable, right? The dollar is supposed to be the pacemaker here. That's why that's a dollar index, right? And it's supposed to be the one that's kind of the rest of the currencies. A lot of currencies used to peg their currencies to the dollar, and which used to be the standard until we started hanky-panking with our own currency. But the dollar is supposed to be stable, not gyrating from an 80 on the dollar index, which it was the last time we had a big crash, to a 114 last month on the dollar index. These are just, they like the dollar nice and stable. Powell, however, comes out after this UN person was talking about what he needs to do, and he said, this is St. Jerome of Jekyll Island saying, quotes, the U.S. takes into account the impact that its policies have on the rest of the world, but that the Fed would continue to raise rates to bring inflation under control. So Powell heard the warnings. He's hearing the outcry from around the world. He's keeping this posture of inflation fighter right now, at least. We'll see if they got the stones to finish it. I mean, this is going to be painful, not only here, but really, really painful for the rest of the world with all the other problems they're dealing with. There's going to be some real unhappy governments around the world. There's going to be disharmony even with our own allies. It's going to be a lot of pressure on the Federal Reserve right now. But hey, guys, you know what? Sad truth here. They deserve it because it's their policy keeping rates so low for so long that people got trained to believe that that was going to be like that forever. Well, now it's time to pay the band. Time to pay the bill. We had the big steak dinner. We had the creme brulee, and we had the fancy wine and whatever with our dinner. And now the bill comes, and now the indigestion comes with it, right? Time to pay the piper, guys, and it's going to be ugly. It's going to be interesting to see what kind of wherewithal the Federal Reserve has in the face of the pressure they're going to be getting, because I'm sure Biden's bat phone is ringing off the ringing off the hook right now with governments around the world saying, talk to this guy, right? Anyway, more interesting stuff today. I was reading that builders now are contacting private investor groups, i.e. also known as private equity groups, hedge funds, pension funds, and offering to sell houses in bulk at steep discounts. So now you're going to see, a whole town of BlackRock-owned houses for rent, a whole town of Blackstone condos that are converted now that are basically apartments. They're offering these bulk deals to these guys. It's just insane what's happening in the world right now. But I'm guessing that these private equity groups, hedge funds, and the big money out there, they've been holding cash. I'm sure these builders being desperate to sell unmoved, these guys need to keep the money moving, right? They have lines of credit. They max those lines out as they build these developments. They need to get that paid off to use that line of credit for further development. I got a feeling that these private equity groups are going to come out of this smelling like a rose with some pretty fat profits and some pretty steep discounts on some new houses. Also today, interesting stuff. More well-known analysts coming out with some pretty dire forecasts. We had Nouriel Roubini, who's been around a long, long time, guys. He came out today with one of the most bearish, negative forecasts I've ever seen him come out with. He's pretty negative usually, but this one's pretty brutal. He said that the stock market will fall another 40%, and a severe stagflationary debt crisis will then smash the over-leveraged global economy. We're all going to now, as I've been saying on the show, we're at the end of an era. The easy money, easy credit, cheap, giving the money away with no interest era is coming to an end, guys. I know that a lot of the viewers on the show are going to be screaming at me and yelling at me in the comments, but it just, I've been around a long time, and I've lived in the world before 0% interest rates in what I call the normal interest rate environment, and we're going to work our way back there, man. We cannot punish savers forever at the expense of debtors. And with the economy the way it is right now and the amount of debt people are carrying, it might not be such a terrible thing. So that's not a real good one. And then you got this hedge fund management. The company's called Hedgeye Risk Management, another private equity group. McCullough, their CEO, comes out. He says that a massive recession is coming. He's putting his clients in cash and gold. And he says, this one made me laugh. He said that the word recession is the new transitory. So apparently, in his mind, using the word recession as opposed to something worse is the same as using transitory rather than entrenched or whatever the word the official word they use. Not a good, these guys are pretty knowledgeable guys. These are not guys who come out and they're only known for market crash predictors. That's mostly YouTube guys that do that. So hearing these warnings makes me take heed. And I hope, guys, that you guys have been doing the stuff we've been saying. You'll be okay if you do. There's a lot of crazy in the world. And to finish the show today, the Atlanta Federal Reserve has their GDP tracker. So I wanted to have a look at that this morning to see how it would predict the third quarter ended for U.S. GDP. Now, this has been pretty accurate. Now, this is what the Fed reports, so take it for what you believe it's worth. But they're going to come out, and the Federal Reserve this month will report, I'm guessing, 2.3% growth in GDP in the second quarter. I don't know if that's weapons sales to Ukraine. I don't know if that's, cars finally breaking their bottleneck and some of this stuff that's, been delayed and orders finally being fulfilled. I'm surprised, though, with the slowdown in housing in the third quarter that the GDP could be positive, but it'll be interesting to read the actual GDP report to see how they offset the losses in real estate with gains elsewhere. Anyway, guys, that's it for today. An interesting Monday. We have all kind of interesting data coming out this week. Make sure to tune in to get your updates. We're going to put out some weekend videos. We'll stick with the Q&As if you guys like it. I want to give you guys an investment formula that I use and some other interesting stuff coming up. So look for our weekend videos. As always, if you like what you're hearing, hit the like button. Share the video with your friends and your subscribers. If you have any questions, ask them in the comments section. Of course, comment all you like. We appreciate that. If you haven't already subscribed, hit the notifications button. And for your more complex questions, stuff that maybe would be more private, ask Chuck Barone at gmail.com. We love you guys. We appreciate it. We'll see you guys again tomorrow. Until then, take care. Thanks.